Everybody good?
Doing fantastic.
Doing great, doing great.
Good. All right. I know you guys' time is valuable, and I know you're very busy today because it's obviously middle of the week. So I'm going to make this as quick as possible, but still as informational as possible. Okay. So a couple people should still be coming, still be joining, but we'll just figure that out as we go. So yeah, this is all about reading and analyzing the charts, and all setups that we ever post inside of the group should follow these general guidelines. I like to call them criteria, guidelines, as you guys know, of analysis. So with that, anytime you guys post a setup or even look at a chart, even on your own, even if you don't post it in our group, it's totally fine. All you have to do is just follow these setups. This is how I read charts myself, and it's just the most successful way that I've been able to find over the last 5 years of me studying these charts. So we're just going to do a quick slideshow and then go straight into the charts. Okay. So this is basically the outline. This is as simple as I could possibly put it. It's just consisting of supply and demand, pattern recognition, and candlestick understanding. So, by the way, anytime anybody has a question during this class, just literally reach out, unmute yourself, and interrupt me at any point, and I promise you I'll answer the question. So, supply and demand. Okay, this is the biggest ruler of everything in stocks. And please have your notes out and take notes on anything. This is all being recorded as well, so you guys will be able to see this after. Yeah, like I say, supply and demand is the entire stock market. I mean, it's the entire economy, as you guys know. It's just this general basic understanding of supply and demand. What I mean by supply and demand is not usually what I mean when I'm talking about or what you might hear in like an economics class, right? And what that means when it comes to the charts is essentially demand is just areas where you buy, right? And supply is areas where you sell. You'll notice that on a chart there are specific, it's kind of coincidentally interesting, but it's very specific where you'll see a stock stop going up at a certain point, and you're going to wonder why did it choose to sell there, right? We don't really know where a stock's supply is after it breaks all-time high. That's why we move towards patterns after that, and then candlestick understanding. So this list right here that you're seeing, this outline, is all just ranked in what's most important to almost not necessarily what's least important, but you definitely want to take supply and demand first. That's the first thing you ever want to look at. And then you want to go to pattern recognition, trying to find patterns in your supply zones or in your demand zones. And then you're going to look at just the candlesticks and see how each individual candlestick, when combined, you can actually individually break each candlestick up to time your entry at the best time. And that way you can swing trade that for maybe a few days, a few weeks, a few months, and there's just different trades that call for uh, different time periods that you would hold a stock. So pattern recognition right there, you're just going to use that to understand how the stock chart itself, how the price takes its form. All right. So whenever you're looking at a chart, please write this down. You are literally looking at the psychology of investors. You're just looking at the psychology of how people are thinking. You're looking at whether they're a little bit nervous, a little bit scared in a certain area, a little bit uncertain versus certain. Okay. So when you're looking at patterns and when you're analyzing candles, you have to think of them in terms of certainty. Are the buyers a little bit more certain than the sellers? Are they very much more certain than sellers? Or vice versa? Are the sellers very, very much ready to sell this thing down? Are the buyers losing confidence on the way up? That's the kind of stuff that you'll start to notice, and patterns tell you that information. Okay, and then candlestick understanding, I put HLOC just as a quick sort of acronym that I like to use because it just means high, low, open, close. I know some of you guys in here are real estate agents. That's what this group is all about as well. And if you know what a HELOC is, right, home equity line of credit, this is not that, but it's kind of similar. So hopefully you can use that to make it a little bit easier to understand. High, low, open, close. So we're going to be talking a little bit about the anatomy of a candlestick today as well. Okay, before I move on, any kind of questions from anybody right now? Questions of anything?
No, I'm good.
Okay, perfect. Alrighty, so right here, these are the patterns. If you guys want to screenshot this, you are absolutely more than welcome to. I'm sharing my screen, right? I hope so.
Yeah, we got it.
Can you
I
guys
can see him.
Perfect, perfect. Okay, okay. I was hoping that I didn't just say all that and not share my screen. Okay, sweet. So yeah, screenshot this, guys. If for some reason you don't have it after the class, literally just DM me. I'll send you the picture. I'll even post it inside the group as well. All right. So this is essentially the patterns. All right, just like over here in the previous step of the entire slideshow. You're basically looking at bullish versus bearish patterns. When I say bullish, it means that the stock is expected to move upwards after the pattern. When I say bearish, it means that the stock is expected to go downwards after the pattern. The point is after the pattern. And the reason that I say after the pattern, you're looking for that bearish or bullish move is because it's called continuation, where a move started and then kind of stopped. So if I can draw right here, that's where the move started, and then it created the pattern of sideways, started moving sideways. As soon as it stopped descending, buyers really picked it up there and then continued this move over here. That way you're kind of seeing this one and then two and then three. So think of that in terms of that, right? You want to know which phase your stock is in order to properly time your entry. Honestly, guys, I'm going to be as real as possible with you. You will never fully 100% get the perfect entry. You're always going to enter, and you should expect to be down on your money in the beginning of a trade. So as soon as you buy, you should expect to be red on that trade, just so you guys' expectations are in line. So as soon as you enter, don't be worried if you're a little bit red. Just trust your analysis, and eventually you'll be green as long as you trust your analysis and obviously you haven't hit your stop loss. Just like this with anything, it's all about stop loss. Okay, you have to find the area where this move is no longer bullish, get out, right? And so on this little pattern right here, the flag pattern, your stop loss should be at the like most below point of the pattern, right? If your stock starts phasing downwards here and starts hanging out here and then starts pointing downwards like that, you want to be out of that trade because that is a failed bullish pattern, right? Again, and I should tell you this too, these patterns are very, very high probability depending on the stock. It is very much dependent on the stock. So you're not always going to get a flag to work out on a very brand new company or that doesn't really have that much volume. You might see a pattern that might just fail out. Okay. It just depends on if the pattern works. That's why we have stop loss. Okay. I like to call them high probability patterns. And honestly, guys, the money is made in a stock when you are seeing it consolidate before it's taken off. A lot of people psychologically like to get into a trade after it's already moved to the upside very aggressively. That is, I've never seen, you guys know all about this Tesla move that just happened, right? Where it just rocketed from our 218 and 242 entries to about 450, 470, right? I haven't heard anybody want to get into Tesla when it was in the 200s. After it was past 400, everybody wants to start talking about Tesla. Man, have you seen Tesla? I'm like, oh, no, I haven't. You guys all know I have. I just tell them that so they stop talking to me. After it goes up to 400 and beyond, people want to get in. You guys all know that if you've been trading even a little bit. So psychologically, people want to get in after it's risen. It's just not okay. So look for consolidation, and that's going to open you up to opportunity. You want to be in a stock before it moves. Any questions so far on that?
Hey, Patrick.
Yeah, Mark, how's it going?
Hey, good, bud. Sorry, I was a little late getting on. Yeah, no, uh, um, this is great. I'm looking at the patterns. I like how you're explaining it. Um, and it makes sense,
Sweet.
what to look for.
Yeah. Any questions? Questions on that, Mark, or anybody?
Oh no, I'm good. I'm just following you.
Oh, you're the man. Thank you. I appreciate the nice comment. So, like I said, guys, there's bullish and bearish patterns. If I can draw them out for you as well, uh, I'll just use this green right here. So this will be bullish right here, that flag. You're going to have a bullish wedge right here. This is called a descending wedge, right? And that's good. Usually descending price action is going to lead to bullishness. And this is a very key psychological note that you definitely want to keep in mind. You guys are probably going to eventually wonder, why is a descending pattern bullish? Like, how does that mean that it's going to go up while it's going down? Isn't it going down? So that means bearish. I understand your point when you say that or ask that question because I've been asked that a trillion times in my life. But truth is that you're looking for weakness. Weakness, like I said earlier, from the sellers or weakness from the buyers. If one there's only one side that can win in the stock market, all right? Either the buyers or the sellers. So if the sellers start to seem weak, notice in the descending wedge, yes, your stock is going down, 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 down. But what happens at this very tail end right here? You have a low, and then you have the stock actually failing to make newer lows. You see how these few candles, their lows are just a little bit higher than the most recent low before that. Right when you start to see a higher low, right? And might get a little bit confusing, so I'll repeat it. After you see a lower low, you want to look for a higher low. Okay, so you might on the right over here, I'll draw it. Might have a stock doing this, right? Reaches a low. All right. As soon as it starts to pull up and now it starts to come down again, as long as there's a higher low there and it doesn't want to go lower, then you have a much higher probability of this thing turning around and actually ejecting to the upside because that's showing you that the sellers are weak. For some reason, the sellers are struggling to push this thing down. And so instead, what happens is over here in this wedge pattern in the middle here on number two there, they start to get weak on the sell side. They can't sell it anymore. You'll also notice that with this shape called rounding, which I'm getting a little ahead of myself, but screw it. Yeah, that's very important. And I'll show you guys a lot of examples on that today as well. You want to notice sellers weakening, which in turn, what does that mean? Buyers are getting stronger, right? Like I said, only one side can win in consolidation, and eventually one will win. So that's another bullish pattern right there, the descending wedge. And like I say, I hope that explanation answers why a descending pattern could be bullish. Like I said, look for that higher low. Okay, look for sellers to struggle pushing that lower, and then you can find the reversal there. So that's if you've never known how to find out why a stock would turn around or where it would turn around, those are two great ways on how to figure that out. Ascending triangle, right? So contrary to the descending pattern, this is an ascending triangle, okay? Whereas the wedge is like a reversal pattern because it starts by going downwards and then turning around and going upwards. That bullish pattern in between is what makes the flip around, like the turnaround, that reversal. Here in the ascending triangle, I don't personally like to trade ascending triangles, guys. I'll be honest with you. I really don't like it. I've only trusted one ascending triangle in my entire life, and it was Apple on the monthly time frame, and I'll show you guys that. But personally, if you guys are, some people are better at it than I am, ascending triangles. Like it's just not my thing because I believe that ascending patterns are bearish, just like descending patterns are bullish. Because I noticed that the sellers are struggling to kind of break this top here. That's the only reason why I get confused with the ascending triangle myself. I'm just trying to be as honest as possible here. I see that it's ascending, so as long as it keeps making higher lows and it doesn't make any lower lows, then sure, right? Keep on holding your stock. But if that does break out to the upside, you do not want to be in short. I guess you could say that you'd rather be long on that pattern because it keeps on making higher lows. So just trade the trend, which is another rule in stocks. That's kind of how I would deal with an ascending triangle, but honestly, 99.9% of the time, I personally don't trade an ascending triangle. I'm just trying to walk you guys through the logic that I have with it. So any thoughts on those three? Questions or thoughts? Any additions?
No, I'm good here. I'm following along nicely though.
Okay.
Yeah.
If I'm going too fast, let me know, please. Or if you need me to slow down a little bit. If you have questions, seriously, there's literally like 8 of us here, guys. It's not a big deal. Ask questions. Alrighty.
Patrick?
Yeah.
Yeah, I'm looking at back at what you just pointed out on the ascending triangle, but when you look at the wedge, yeah, I see your point. So now I know it makes more sense why you wouldn't or you don't feel as comfortable on an ascending triangle. the formation versus the wedge,
Yeah,
you can kind of see that, I guess, price, what would you call that, price action of where,
right, right.
right, you take it's starting to come together a little bit more now as I'm looking at this, as you're pointing it out. It makes more sense.
Yeah. Yeah, man. I mean, I hope the ascending triangle makes sense to you. It's just about the higher lows and weakness. So I'm just
Hmm.
assuming that right here, like the sellers were very, very just pushed up against a wall here. And honestly, there's a golden rule of thumb in stocks that I know about. Just when you're seeing a stock tap a level, the same level 3 times, it's very likely that it's
Hmm.
it's ready, it's weakening. It's like a battering ram hitting a door. The SWAT team's coming in. Like it's if you keep on ramming that
Right.
door, it's gonna come down.
Hmm.
So that's kind of the only way that I can justify kind of contradicting the wedge there. That's the only way that I can make sense of that. So that's how I'll think of it if I see it. So if you guys see it, point it out. That's why I'm trying to explain each of these individually, so you can kind of go back to this video
Hmm.
and reinstall that kind of explanation, so you guys know what to look for, and not just like what you're looking at, but why. Why is the ascending triangle doing that? Why is the wedge doing that? So you can kind of use your scales of justice there to kind of justify or find out which way this is most likely going to go based on weakening sellers, weakening buyers, and then, betting on that other side.
Gotcha.
Yeah. So keep in mind, I mean, you've got two things when it comes to patterns. It's continuation patterns or reversal patterns. Those are the only two kinds of patterns that exist, right? Where your move is going to start, make a pattern, and then continue. That's a continuation pattern, like the flag. A reversal pattern would be that number two there, the wedge. It's going down, makes that bullish pattern, turns around and goes up. Yeah. My favorite patterns, guys, and I could do a whole class on patterns alone, which I probably will for you guys eventually, but this is essentially what I'd start that class as or with. So I'll keep it a little bit briefer on this time, but we can literally dive so deeply into all these patterns, and I can show you evidence of stocks that I've traded with all of this, with every single pattern on this board. I can show you stocks that I've traded with, and each of these has happened and how I've traded them. So I'd love to have a class where I just psychologically walk you guys through each of those. So some of my favorite patterns, honestly, are this cup and handle here, right? This one right here
Hmm.
in the middle. That's awesome. It's literally just a flag on a micro scale. Look at that. You see how it like pushes up here,
Yeah.
makes the flag, and then pushes up higher. It's this exact same thing right there on the flag. It's the exact same thing. So that's how I can tell, like, oh, there's a higher low here. Remember, lower low, there's a low right there, and then there's a higher low next to it. So I notice that the trend is reversing. I'm just trying to catch that. Epic moves. And yeah, I mean, honestly, the first half of this whole page is bullish patterns. Second half of it is all bearish patterns, okay? So keep those in mind. Which of these patterns do you guys want to see on a chart so we can go over them, and I can talk about supply and demand and candlestick understanding. Which of these patterns would you guys want to see on a chart?
The Head and Shoulders.
The head and shoulders.
Yeah.
Perfect. All right, let's
Shoulders,
go
yeah.
ahead. Let's go ahead and do that. So let me take you to the charts. All right, can you guys see my chart here?
Yes.
Perfect. Okay. Honestly, there's a head and shoulders here on Tesla, but I'll show you one on SPY right now. This is why I literally made the announcement, I think a couple days ago, to not trade the SPY right now because it's absolutely trash. As you can see, the price action has been consolidating pretty much at this same exact level since about October, like mid-October. So we've literally been in the same exact price range since October last year. That's a long time, okay? And the SPY is going to make a very, very explosive move, and this pattern is starting to make it look like it could be downside. I'm not saying that it fully will, but I think that it has a high likelihood. The head and shoulders is characterized by a higher high, right? A very aggressive move to the upside, pulling back a little bit, and then pushing up, right? And anytime you see a higher high, that has a chance to be the quote unquote left shoulder. It has a chance. Okay, not that it will, it could just make a bull flag and then keep riding up to the upside. But if you start to see weakness right here, and you guys can actually go back and see around this mid-December time where I literally said that the top was in, and then we got this big giant red candle on SPY the very next day. You can actually go into the trades and scroll up and see when I called that out. So that right there dropped, and there you go. That's your head now. Okay. As this comes back up, you're looking at this left side of the screen here to try to match it on the right side and see if you can get a top there. So that's a great entry for like a puts position if you trade options or just a regular short. Even you could long the volatility index or just long the opposite of SPY, the SPXS, which is the S&P 500 short. So whatever strategy you want to use to make a little bit of money when you think the SPY is going to go down, the S&P 500, you can identify that pattern and see that that's happening. So this is an example of a head and shoulders where this is the left shoulder, that's the head, and then the right shoulder is kind of over here as well.
Mhm.
Yeah. In fact, one of the biggest head and shoulders that I actually never took advantage on because I don't personally like to do downside trades. I feel like my eyeballs are just better on upside trades. I've honestly lost my ass a few times on downside trades, so that's why I just don't do them, just to be completely honest with you guys. Over here on Tesla, I noticed that there was a bit of a head and shoulders, and it's a little bit hard to see, but right here, boom, shoulder, right? Like I said, that was a bull flag at the time. Remember, we didn't even know that the rest of this existed. Pretend that didn't exist. All we were seeing was that flag. And then it pushed up, created this head. Remember, we had a high, then we had a lower high, and then we had a lower high. So it's starting to make a downtrend. That's either good news or bad news. And as you can see, this thing kind of swirled down, pushed up, and just hit a top and couldn't go up any further. So that's a great short as well. I bet you there's a head and shoulders in that move too. And then right here on the right, another shoulder. So if you guys want to, really trade head and shoulders, I personally would tell you guys to stay away from them because they're very tricky. Buying puts or shorting a stock using a head and shoulders pattern, it's valid, but it is very, very advanced and highly difficult. So just keep your stop losses tight if you ever want to trade that. I don't even like to trade them
Mhm.
unless they're like dead obvious, and obviously news can help with that, catalysts, but I don't really like to trade these myself unless they're dead obvious because I've experienced them. Basically, the biggest thing you have to know about head and shoulders, the last point I'll leave off on is just look at that left shoulder after you've confirmed that the head has fully come down here. Watch it bounce back up, and then that is where you're going to kind of see where you should short next. I'm trying to see, can I draw a straight line here? There. So this kind of shoulder on the left side. So let me get rid of my Picasso there. You guys know what the head and shoulders looks like. So here's the zone.
Mhm.
And then that's literally just where you would short it here with that other box on the right. Head and shoulders. It's a reversal pattern, and it's honestly a beautiful pattern. If I can draw like a quick little diagram on the left, you've got a stock that's just trudging up, right? Hits a top, and then starts coming down, okay? It makes that little bull flag. What do we do with bull flags? We long them because they're most likely bullish patterns. And then you start to see it go up, right? Hits a top again. And then you start to see it consolidate. If they can't really make it up past that, start to see it come down, right? And then you'll start to see it go back up, hit that top. And that's the moment where you want to start thinking, okay, this is a head and shoulders pattern, high likelihood. I'm going to keep my stops tight, like right here at the height of that previous shoulder. And then as long as it doesn't cross this threshold here to the upside, I'm good on my trade. And then I'll ride that bad boy down.
Hey, Patrick,
Yeah.
like if you look at the head, you see the formation of the three candlesticks in the red as it's dropping, and then all of a sudden you see what would you call that? The resistance line
Oh, this
where
support.
yeah, and then all of a sudden you see the green candlestick that's parallel with the red one.
Yeah. Oh,
So is that
exactly.
something also to look for? Yeah, where you're looking at three of
Yeah.
the candlesticks with the okay.
Yeah, that is something to look for.
Yeah,
I get what you're trying to say, I think, where you're thinking that it's going to keep on going to the upside because of the giant green candle.
yeah,
Is that what you're trying to say? Yeah.
yeah,
Perfect.
exactly. Yeah, that's how I was looking at it.
I see exactly what you're saying. And honestly, there is a trade there. I personally wouldn't trade that though, because in my opinion, that's a pretty big gamble. You know, you have Tesla just in a direct uptrend the whole way. And who knew that
Hmm.
it was just gonna stop right there? I sure didn't, I'll tell you that back then.
Right.
So
So it's a risk move.
it is a risky move, but hey, that's what trading is. It's risky. So if you want to try that trade, put your stop loss in like near the all-time high, right? And then
Mhm.
your that all-time high was at about like 400, 420-ish almost. And this height of this move was like peaking into the 385, 382s or so. So like, you're not going to lose that
Mhm.
much when you go short there. But keep in mind that that is a lower high than this previous high and this previous high. So that's kind of what would begin that downtrend if there is a downtrend.
Mhm.
So you'd just be taking a pretty big risk there, and then your risk would
Yeah,
be largely decreased, and you'd be very much in the green on your short trade if you
short
saw
trade.
that
Yeah.
these parallel candles, you see how the bulls like really push this green candle up, and then immediately the
Mhm.
sellers match their energy on the downside.
Yeah, I see that.
That's showing you how strong the bulls are, right? How strong the greens are, which is not that
Hmm.
strong.
Right.
So if you're able to match that energy, you're most likely going to get a continuation towards the last candle when it shows you these kind of tweezers. Does that make sense to everybody?
Yeah, I see.
Yeah.
Yep.
All right, good. It's all about matching the energy and noticing who's weaker. Think of weakness and certainty versus uncertainty. Strength, weakness, certainty, uncertainty. Last thing I'll say about the Head and Shoulders, because it's really, really the most important thing I think I'll ever say about Head and Shoulders. You're going to just characterize it with a initial bull flag like this right there. I'm drawing it in a different color. And then at the top here, you could see like a double top, right? On Tesla, there was a double top here in this, even a triple top, you could say, in this Head and Shoulders.
Hmm.
Sorry, I know they're so ugly circles. I'm literally writing this with my mouse pad. And then at the top here, you got a double top, for example. So you'll start to see like signs that the stock doesn't want to go higher. Then, that's a bearish pattern. Then you'll see this, and now there's a bear flag happening. So it's a bull flag, usually a double top after that, and then a bear flag. Okay, think bull flag to bear flag. That way you can see that this is the bullish pattern, this is a bearish pattern, and then a bearish pattern. Full-blown reversal makes full sense to me. If it doesn't make sense to you guys, ask questions. Unless we're all good?
Hmm.
Okay, perfect. Can you guys hear me? Oh,
Yes.
okay, sweet, sweet. Sorry. Yeah, this Zoom is my computer's just deciding to tweak out today. Yeah, other pattern. Then I want to dive into some supply and demand and really just analyze a chart. Or you could literally pick out a trade we took maybe and we can go over that with everything that we've discussed today so far.
Hey Pat, I don't know if it was on the list or not, but one that I see pretty often, one that's easy to spot is like a double top or a double bottom.
Oh yeah.
Yeah, I don't know if that was on the list or not, but that might be an idea too.
Yeah. So that one's not necessarily on that list for some reason. I don't know why, but I just found that list online. It seemed pretty accurate. So,
Uh-huh,
yeah,
for sure.
Tesla, in my opinion, was a double top. All right.
Mm.
And that was, wait, let me pull this out. 3 years only. Damn. I never use this computer version. So, I mean, look at that reaction as soon as it broke that previous top over here. Like it's not necessary a double top. This is the biggest misconception of double tops, guys, ever. But the double top does not necessarily have to be like perfectly even, Just because it breaks out to the upside after like the previous top, yes, that's technically bullish, but depending on the reaction after that, I mean, look at how hard that sell candle was after it broke out to the upside. Like that's a very red candle on the high there, 488, and the week closed around I want to say like 420. So that's quite the rejection. I mean, that's a 60, $70 almost rejection from the new all-time high that Tesla had. And what does that tell you? Does that tell you that sellers really want or sorry, buyers want a piece of that anymore? That kind of shows a lot of uncertainty about Tesla there. Maybe just oh yeah, I've seen what happens when we hit all-time high on Tesla, and I'm not, fooled by that again as they were back here. So that right there could be considered a double top because the general area, this is all about supply and demand too. That's what double tops are, honestly, Stoff. It's all about supply. So right here where you have the sellers, yeah, that's kind of like that general area. And the reaction there was very bearish. Right now, it's starting to show like that it wants to hold up over that big zone. You can even make this zone a little bit bigger. I'm sure if I drew this on the monthly, it would look huge. So yeah, we're trying to see if we can find some value around the 375, 380 part and see if it wants to continue. But for now, yeah, that's right. That right there is a double top. One of the meanest double tops of all time, I think I saw. Was it this one? Yeah, Square. Square was one of the most insane ones ever. There's also I have to think of it. I'll show you guys once I think of it. I forgot it was so long ago. But this is what we would call, and I've heard this from a trader I used to work with. It's called a Batman, and the reason that it's called that, it's a silly name, is because of these pointy kind of ears. So if you see the Batman, you don't want to be near that at all. All right, kind of these pointy ears right here. That right there leads to the double top, and you got a top right here, a top right here, and you're seeing extreme downside from this company called Square. So stocks are really just about going back and forth between supply and demand, right? Look what happened after the massive double top. It came right back down into the old demand zone from 2018 and 2020, right? This general area. And look what happened in early or later, late 2024. Or sorry, late 2023. Right where it was bought up during COVID, right there, purchased again. I'm probably going to have to like separate each of these concepts into separate classes so we can just focus on those. Dive deep on each of those supply and demand patterns and candlesticks. So that right there is a double top. Does that kind of make sense, Stoff? Do you have any questions about that?
No, I don't have any questions, man. Yeah, I'm all good. That's just something that I feel like that pattern that I see a lot, and it's kind of it's an easy one to spot in my opinion. It seems pretty simple. So yeah, that's a perfect example. Thanks, Pat.
Yeah. Here's another head and shoulders. If anybody is a betting man or woman here, you got DraftKings way back when. This one, full blown head and shoulders. I know we were talking about head and shoulders a little bit earlier. Right here, shoulder, head, shoulder, and yeah, that's you could also call that a triple top, but this is very, very, yeah, pointed, very sharp. But I mean, I like the stock here. It's been making some good consolidation. So like right now, you could start to look at DraftKings kind of making a pennant pattern like we saw a little bit earlier. If this keeps on consolidating like this and gives us a little bit of better value, I would probably look to buy it here around 30. Unless it wants to keep on maintaining its strength here, then I'll have no reason but to buy it because it keeps on showing me that it doesn't want to make a lower low over here. As long as you don't want to make a lower low, DraftKings, I'm all good. And then you can go to the upside. One of our trades that is actually failing at the moment, just so you guys know, sometimes I take losses too, is Nike. Okay, Nike here. Honestly, I wanted this to, let's look at the weekly. I wanted this to kind of, let me just draw this on Zoom so it's a little bit clearer. I have all these zones there for me. I wanted this to be a pattern like a giant descending wedge, and it's still possible, but I don't know. This is a trade that is now beyond the stop loss on the bottom, and I've seriously been decompressing the position. Like there's not that much pressure on this position right here. Because my stop loss was around 74, and I took that because I put 74 because of just this general zone. And now it's kind of just pushing below that, so I'm getting my account cut a little bit up by that, and it's nothing crazy, but yeah, it's a pattern that is just going to decide to take a little bit more time. So I'm waiting on it until I should add to it. So I'm just going to use that money for better trades. So
Mhm.
I'm seeing that kind of consolidation move to the downside right now. It's a different setup now than what I originally wanted. What I originally wanted on this stock was to not fail 76 because that was where this low was. A lot of strong buying happened here. It pushed up, came down, and I wanted us to stop going down here, not make a new low, and then push up. That's what I wanted. I wanted us to just go on a super rally into the, 90s at least. That's kind of what the setup was because of the descending wedge that I had pointed out earlier. And unfortunately, this was a trade that failed. So now you guys can kind of see that was the point. This 76 level here was the point where I didn't want it to go lower than. That was my trade idea. It's been below that for 2 weeks now, so I am barely, barely in it. That's what stop losses are for, though. That's how we save ourselves and protect our capital, preserve capital.
Mhm.
The stock market is all about survival. And yeah, it's like anything else, survival of the fittest. All right. So, you know how many people would not cut their stop loss because they're just so hoping they're suffering from this drug called hopium, hoping that it's gonna just turn around and go back up. It's not it's not the case. So I'm expecting Nike to go even lower than this right here. And if that's the case, then I'll have to zoom out and identify the 60s and say welcome Nike to the 60s.
Mhm.
So it's a setup that I've lost. I've lost this one, and I want to really, really see if this can work out because, in my opinion, we're in a damn good demand zone. That's my analysis on Nike. We're in a solid, like 5 year zone of demand, or even, almost 10. Back here from 2015, 16, we're in 2025 right now. Unbelievable that it's true. And then right here, if Nike can get down into this zone, that's when I'll really start to bring this back to the group. I'll start to bring Nike back to the group if it can get down there between the 60s and 70s.